You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 26th day of January, 2024. Everybody's been working for the weekend, and by golly, it's almost here. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do two every trading day. First broadcast is our live training room. That is reserved for our members and those who are taking their 1 week free trial. If you haven't taken your 1 week free trial, you can do so by going to mytradingiq.com. At the very top of the page, there's a link. It says 5-day free trial. No credit card required. In fact, it's the opposite of requiring a credit card. It's on our dime. We invest our time, our resources, our energy in you for 5 consecutive trading days so that you can learn and make a well-informed and intelligent decision as to whether or not trading for a living is right for you. So again, mytradingiq.com, top of the page, 5-day free trial. Now you might think, well, today's Friday. If I go sign up for the trial today, I won't get much. Not true. Friday's probably the best day to sign up for the trial. Because what will happen is once you fill out that registration form correctly so that we actually get the information, it's an automated process, so you got to put everything in the right spot. It'll only take you a minute or two. What'll happen as soon as we get notified that you want to take the trial, then this afternoon we'll help you get your desktop set up, get your indicators indicating, and then you'll have the weekend to get familiar with the indicators. Then your free trial will actually start Monday morning. You'll have access to what we do on Sunday night because the Globex markets open Sunday night at 6 p.m. Eastern. So you'll have access to that. And then you'll have your 5 consecutive trading days all next week, Monday through Friday. So I know many people will be hearing this after the fact as opposed to live. We're broadcasting live now, but some folks will hear it on our YouTube channel later. I just want to assure you, you don't need to worry about what day of the week or weekend or hour of the day that you sign up for the free trial. You will get 5 consecutive trading days, even if it stretches over a weekend. Okay? And you're not just getting access to the live training room, but during those 5 days, you have access to every resource our lifetime members have access to. Now, our lifetime membership, we will stop accepting new members to the lifetime program January 31st. So jump in there, get your trial, make a decision, because once that door closes, it's closed. Now, those who are lifetime members, when the clock strikes midnight, January 31st, you have nothing to worry about because you are a lifetime member. Nothing at all changes for you. We just won't be accepting new people into the lifetime membership. See, the lifetime membership, there's no recurring fees, no upsells, no nonsense, ever. It is probably the single best deal on planet Earth when it comes to trading that you can possibly find. But we're moving into a different business model going forward. So if you want to learn how to trade, if you're tired of going down these blind alleys, searching for the holy grail that just doesn't exist. The only holy grail in trading is learning how to trade. And that's what our goal is, to teach you how to trade. Now, that's a very valuable life skill. Once you learn, nobody can ever take it away from you. And because of the way our strategy works, you're not learning to just trade a specific instrument, like a futures contract or an individual stock or crypto or Forex or an ETF. What we're teaching you is how to trade anything, anywhere, anytime. That's a very valuable life skill. So if your goal is to trade for a living, I would highly suggest you get on board with a lifetime membership with no recurring fees and no upsells before the door closes midnight, January 31st. Now, every trading day, when the live training room ends at 11:30 a.m. Eastern, take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's two different ways to join this afternoon broadcast live. The best way, because you only have to do it once, go to mytradingiq.com and scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. What will happen going forward is every trading day, about an hour before this broadcast starts, you'll get an email. In the email, there's a link. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of doing it that way is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. You can. And there'll be days when you're busy and you can't join live, but you want to get caught up later. You can. I'm talking about our YouTube channel. It's very easy to remember. youtube.com/CFRN. It's right there on the screen. You already know the YouTube part. /CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,400 daily episodes archived for your educational and viewing pleasure. And if you are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but you can actually see how we've evolved over the years. Thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Of course, you're not going to listen to them all. but just pick a few days at random. Listen in a little bit. You'll quickly discover the thread of connectivity, the thread of continuity woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. All right, let's open with our daily devotional and a word of prayer as we do each day. Then we'll get into the markets. Then about 12:45, 12:50, Michael will join us. He'll give us a recap of what happened this morning in the live training room. Then we'll go live on the TradingView platform for 30 minutes. And then I'll wrap things up with our good word for the day. Now, the topic for our devotional this week has been how to be rich God's way. I want to share something with you from the life of Andy Stanley. I know many of you know that name. Some of you don't. So Google him sometime. Watch some of his videos. He is a great preacher. He's not a hellfire and brimstone kind of guy. He's very upbeat, very positive. But this is a little snippet from his life. Let me share what he wrote. It's interesting that no matter how sophisticated their many civilizations are, the uber rich still manage to feel insecure. Years ago, Sandra and I had dinner with a billionaire couple. We knew they were billionaires because it had been all over the news a few weeks earlier when they sold a company for billions of dollars. While we were having conversation, this couple began talking about all the economic threats we face today. And with a very serious tone, they remarked about how you have to be really careful with your money because there's just no end to the ways you can lose it. Their concern was sincere and their fear was authentic. Andy goes on to write, when it was over, Sandra and I just looked at each other and silently communicated what we were thinking. If the billionaires are worried about money, we're in big trouble. The couple was right about one thing. There are lots of needs that even $1 billion can't meet. Now, you don't have to be a Christian to get behind this principle. We've all seen that it doesn't work to count on money for your hope. Like the MasterCard commercial admits, there's some things money can't buy. It can't buy the priceless things in life. And there comes a time when it can't buy hope either. Because there's no amount of money that can guarantee you hope in any and all circumstances. Therefore, putting your hope in riches is a dangerous trap. And Jesus knew all about this threat. That's why he had more to say about money and possessions than heaven and hell combined. Proverbs paints a picture of what can happen when our hope migrates. In fact, the writer concludes that he would rather not be rich so as to avoid this threat. He says in Proverbs 30, verses 8 and 9, "Give me neither poverty nor riches, but give me only my daily bread." Otherwise, I may have too much and disown you and say, who's the Lord? Again, that was Proverbs 30, verses 8 through 9. Join me in a word of prayer. Heavenly Father, as we stop for a moment of prayer, our hearts are drawn to the wisdom in Proverbs 30. Lord, we humbly come before you, seeking your guidance and provision. Grant us the discernment to walk in integrity, keeping falsehood and deceit far from us. Help us to conduct our lives and our trading with honesty and integrity, honoring you in everything we do. We acknowledge our dependence on you for our daily needs. Just as the writer of Proverbs sought only their daily bread, we also pray for your position in our trading endeavors in every area of our life. Keep us from the temptations that come with excess wealth, which may lead us to forget our reliance on you. Likewise, guard us from poverty, which may tempt us to compromise our values. Lord, help us to find contentment in your provision, trusting that you will supply all of our needs according to your riches and glory. May we use the resources you entrust to us wisely and responsibly, always seeking to honor your name in everything we do. As we engage in our trading activities, may your wisdom guide our decisions and your grace sustain us. May we always remember that our ultimate wealth lies in knowing and serving you. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. Well, happy Friday. It's finally here. Get 2 days to kick back and put your feet up, unless you work weekends, I guess. All right. Let me give you the numbers from around the world, starting here in the U.S. with the cash markets, or the indices as they're called. Dow's up 104 points. NASDAQ is up 18. S&P 500 is up 8. Russell 2000 is up 8. No movers, no shakers. Pretty quiet out there today. In the commodity basket, crude oil down $1.08, trading 76.28 last. It's a drop of almost 1.5%. Gold down 90 cents, trading 20.1690 last. Silver down 3 cents, trading 22.89 last. In the Asian markets at the close, Nikkei dropped 485 points. That's over 1.25%. The Shanghai gained 4 points. The Hang Seng fell 259 points, which is a little over 1.5%. And in the European markets at the close, FTSE up 105. It's 1.5%. The DAX up 54. The CAC up 169. That's a big day for the CAC. That's a gain of over 2.25%. So it was a mixed day in Asia. It was a green day for the UK. And so far, it's a green Radio Friday here in the US of A. Let's go to Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just the E-minis though, it's also crude and gold, silver, euro, bonds. We're in week 286. And yesterday we crossed quite a milestone. Over the last 286 weeks, we have now issued over 16,000 individual handcrafted alerts. And of those 16,000 alerts, we've averaged 20% or less being stopped out based on market structure and a very simple process that we teach all of our lifetime members. Now, this recap was done this morning at 6:30 a.m. Eastern by Valerie. She will update it this afternoon and finalize it for the week. Now, last week we ended up with 10% of the total alerts stopped out. This week, we're closer to what we've averaged over the last 286 weeks. At the time Valerie did the recap this morning, there had been 51 alerts issued since the markets opened this past Sunday night at 6 p.m. Eastern. One never triggered, still waiting on 8. Gave us 42 actionable alerts, of which 10 or 24% would have been stopped out based on market structure, and that simple process we teach all of our passport holders. Now, there have been some additional alerts issued today, and some of the ones waiting may have triggered as well. So this afternoon, you'll see the results for the week. And again, when we launched Logic 247 286 weeks ago, I mean, it's now been 16,000 individual alerts issued. Actually, over that now, it's like 16,020 or something. Okay. Each Logic alert, by the way, has an entry, an initial target, and then often multiple targets, and then a final trade to target. If it's a long trade, the final trade to target will be the weekly trading zone above. If it's a short alert, it will be the weekly trading zone below. Now, with the Logic alerts, I look left for you to spot potential obstacles to the trade. Previous swing highs and swing lows that can become current support or resistance, depending upon whether it's a long or short trade. The purpose of the alerts is not just so you trade the alerts and don't have to learn how to trade. The alerts themselves are part of the training because there is time built into each Logic alert. For you to get the alert, go to your 30-minute chart. See with your own eyes the window of opportunity that the alert represents, and then you'll be prepared to take action with your range chart when price reaches that area. But the more times you repeat that process, get the alert, go look at the 30-minute chart, because that's where all the alerts are created. The Logic alerts and the concierge trade alerts, they all come from the 30-minute chart. Pretty soon, you'll start spotting the windows of opportunity before I even post them. That's if you're using the alerts as the training tool that they are intended to be. Because it's the same methodology over and over again and again. Get the alert, go to the 30-minute chart, identify the area of opportunity that the alert represents, then simply wait for price to get to the area and execute the way Michael teaches you every day, every trading day in the live training room. Trading is not easy, but it can be simple. Now, long before we had Logic 247, 286 weeks ago, which is over 5 years, hard to fathom, true. We had our original alert service, the concierge trade alerts, and they're a little bit different in a couple different ways. Now, the logic alerts, those come out around the clock. It could be 2 a.m. or 2 p.m. as opportunity presents itself. But the CTAs are published as a static report shortly after the Globex open each evening. Last night it was 6:05, so that's 5 minutes after the open. Now, if you come from the world of equities, you think of the Friday session as 9:30 a.m. Eastern to 4 p.m. Eastern. But those who trade futures know that the Friday session actually began last night at 6 p.m. Eastern. That's when the Globex markets open. We go to work Sunday night at 6 p.m. Eastern, and the Logic 247 channel stays open around the clock till Friday afternoon at 5 p.m. Eastern. But back to the CTAs, these are different. You'll notice these just have targets. Remember, the logic alerts have entries, initial targets, sometimes 2, 3, 4 additional targets, and then a final trade to target. With the CTAs, you're stepping up your game. Okay? Our goal is for you to become self-sufficient. If you want to trade for a living, it's never going to happen waiting for somebody else to tell you when to get in and when to get out. You got to learn how to do it yourself. And that's our goal for you. Hopefully that's your goal for you. When the report comes out, the first thing you do is go to the 30-minute chart of whatever markets you trade or are learning how to trade. We'll just use the ES as an example. The first thing you would do is make note of where price is on your 30-minute chart at the time the report comes out. It will always be between these two numbers. Then draw a line in the sand at the long target, line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now the BBC, when we go to the charts, will be the green line that you see both on my daily chart and on my 30-minute chart. BBC simply stands for bull bear cross. No matter what time frame you put that green line on, from daily all the way down to 1 minute or a tick chart or a range chart, if price gets above the green line, then we're bullish and anticipate higher prices. If price gets below the green line, then we're bearish and anticipate lower prices. It's really that simple. Now, of course, that's relative to whatever time frame you're using the BBC on. So you'll hear me say BBC a lot. Remember, it just stands for bull bear cross. Price crosses above it, we're bullish, expecting higher prices. Price crosses below it, we're bearish, expecting lower prices relative to whatever time frame you're looking at. Now with the CTAs, you got to look left yourself to spot those potential obstacles. And we teach you how to do that, both in the live training room and in your one-on-one mentoring sessions, and every week in the members only workshop, which we had a great one last night. For those of you members who missed it, you got the key to the vault. Be sure and check it out over the weekend. You'll also learn how price behaves at a weekly trading zone. Now, that's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC. It's trying to reach the weekly zone above. If price is below the 30-minute BBC, it's trying to reach the zone below. We've published the zones every week since December 14th of 2009. They come out Monday morning at 6:15 a.m. Eastern. Once they are published for the week, they're carved in stone. They do not change in any way whatsoever. As you learn how price behaves at a weekly zone, the zones will become one of the most important tools in your trading toolbox. Remember, price is always trying to reach a zone. And you know which one it's trying to reach based upon where price is relative to the BBC on the 30-minute chart. Now is the hard part. Resisting the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty easy to reach your goal for the day. Now, because this broadcast is open to the public, see, all of our members and trial members got these targets last night at 6:05, 5 minutes after the open. So when we get to the 30-minute charts, just remember, 5 minutes into that first candle after the market opened last night, our traders and trial members had all these targets. Okay, if you want to grab a screenshot, you can. If you're watching after the fact on our YouTube channel, youtube.com/CFRN, just hit the pause button and jot down the numbers that are important to you. Okay. All right, let's go look at the daily chart. Now, last night during the workshop, I made some changes. See, we're now trading the H contract in the indices. So back over here, in April and May, there was very little trading activity. See how sparse it is? But then once we rolled into the H contract, you can see starts to look kind of normal, right? So what I did last night was I said, let's change our February tracements from the most, as you can see, this is the important swing low since we started the March contract, okay? October 27th is when this low came in. And so you draw your fibs from the most recent major swing low. Now, this is a daily chart. Okay. In an uptrend, you draw from the low to the high. In a downtrend, you would draw from the high to the low. And so we've got a double top going here. This is the Friday candle, Thursday, Wednesday. Wednesday, we put in a new high at 49.33 1/4. Today's high is 49.34 1/4. So we actually took out Wednesday's high by all of 1 point. Whenever you put in a new high or new low by 1 point or a couple of points, especially, on a daily chart, be very, very cautious, okay? That could be a trap. We know we've got resistance overhead at the high of the day. And where's the low of the day? Sitting right on top of the step line. So for 2 days now, the step line has served as support. Below that is blue and climbing. That's potential support. And you've got the 24% fib extension, then the BBC, then the 24% fib retracement. I recommend that whatever you trade, whether it's a different futures market, an individual stock, crypto, forex, ETF, whatever you trade, spend 2 minutes with the daily chart as you begin your trading session and identify where major areas of support and resistance are. Institutional traders, the ones who actually move price because of the size of their accounts and the size that they trade in, they're the ones that actually move price. They look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So by looking over the shoulder of the institutional trader to see what they're looking at, all you have to do is what the institutional traders are doing long enough to get your goal for the day and then have the discipline to put the mouse away. Right now we've got a doji on the day that's indecision. Now after putting in a 1 point higher high to see the market back off like this tells me that while buyers were certainly committed enough to push us up to the high of the day, there's A, profit taking, and B, concern that price may not go higher. Just keep in mind where we close today will be very important, and that will help guide you when the market opens Sunday night at 6 p.m. Eastern. So the deep pockets that move price, being able to look over their shoulder. Now when you see that there's indecision, okay, when you're building a big green candle, well, you want to be looking for long trades. When you're building a red daily candle, you want to be looking for short trades. When you've got a doji, then you have to rely on what's in front of you on your smaller time frame. So here's the ES. The vertical line separates today, Friday, from yesterday, Thursday. We drew in this window of opportunity yesterday, and it filled. We drew this in live on the show. And then yesterday afternoon in a mentoring session, I drew in this window of opportunity, which, as you can see, filled today. Then last night in the workshop, we drew this window of opportunity and this window of opportunity. And I said during the workshop that I favored the short side. Okay. 49.05 down to 49.02. 3 points. You only need 2 points to get your goal for the day. So we opened and we consolidated at the weekly zone, 49.11/12 for quite a few hours. Blue and climbing up here turned to red and falling, and we dropped right into that window and hit our short target. Now when the market finds support, as it did right here, you see this low led to this high. And any trader that missed that move, they're not going to let it get away from them again, so they're going to come in a little bit early. Red and falling turned to blue and climbing. Price got above the BBC. And then this candle right here opened at 49.08 and ran up 3 points to the zone. Now, only 3 things happen at a zone. 70% of the time, it's consolidation. 20% of the time, it's rejection. 10% of the time, it's the slice. That's when the candle slices, the 30-minute candle slices through a zone like it's not even there. When that happens, as it did here, price will typically retrace back to the zone it sliced through and continue in the direction of the slice. Okay. So we got a nice leg, plenty of room up here. Once we got above the zone, you get your goal for the day. Price always reverts to the mean. In our case, the mean is green, and as I explained, it's called the BBC, bull bear cross. When price is below the green line, we're thinking short. Above the green line, thinking long. And we're getting back below the BBC right now. But we hit our short target, and we hit our long target. And we fill that window of opportunity that I drew in a mentoring session yesterday afternoon and pointed out to everyone last night in the workshop. Now, the pullback to the BBC holds more often than not. Okay, as you can see, it held here, 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 here. And so far, it's still holding. Okay, there's still, 18 minutes left in the life of this candle. In 18 minutes, things could look very different. Price could be below the zone. If we drop below the zone, be careful because right here we got a bullish cross. Whenever you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. Same is true of a bearish cross in the opposite direction. So may this be the high of the day and the week. It may be. We need to see what happens. Price comes all the way down to the zone, we expect support. Until proven otherwise. So if price can get below this area, then this window of opportunity that we drew last night during the workshop, it's still valid. Okay. If I can drag it over without messing it up. No. Should have left well enough alone, but anyway, you get the idea. It's still a valid opportunity. You got to get below the zone. You got to get below that bullish cross. You got to get below that low right there. And actually, your entry could be 49.06 down to 49.02. That's 4 points. Only takes 2 points to get your goal for the day. On the Dow. Again, the vertical line separates today, Friday, from Thursday. Back here's Wednesday. And if we keep going back, Tuesday, you get the idea. So again, when price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support. 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 And the high of the day yesterday was right at the zone. Resistance. Now these are the zones that were published Monday morning at 6:15 a.m. Eastern. As I said, once they're published, they're carved in stone for the entire week. They don't change. So we've got a nice pullback coming now down to the zone, which we expect to be support until proven otherwise. And just below it is the BBC. which we expect to be support till proven otherwise. So if the pullback holds, then we'll get another opportunity to trade long. But if the pullback fails to hold, we simply trade it short. That's one of the beautiful things about trading futures. One of the many beautiful things. This would be roughly 38,175 down to call it 155. Okay, that's 20 points, go for the day. Now, price could keep going down to this swing low. And so you can either get your go for the day and put the mouse away, or you could choose to stay with it. Now, that's only if price, we've got support ×2 here. If price breaks through both of those, then we're probably headed a lot lower. There's potential support here, potential support here, and potential support here. Then here, then the weekly zone. Right now, we initially touched the zone and we bounced. Okay, remember, when price drops to a zone, think support. When it rallies up to a zone, think resistance until proven otherwise. On the Russell, we opened and we were just kind of flat and sideways last night. We finally reached up and touched the long target. Now we're below the VBC and we're heading for the short target. There is potential support right here. Okay. So this low, this is 1983.3. So 82 down to 80. The zone 78.79. There is a window of opportunity there. I suspect that's the high of the day on the Russell. On the NQ, here's where we opened last night and we just dropped straight to the target. Overshot the target. Got above the BBC. Pulled up to the weekly zone where we consolidated. Remember, that's what happens 70% of the time. Pull back to the VBC. Got another leg. That's how the market moves in legs. Leg, retrace, leg, retrace, leg, retrace. Now on the NQ, we've traded through the BBC. See, that pullback held and all these pullback held, but this one doesn't look like it's going to hold. So down here, you got a nice window of opportunity at about 17,490 to 17,470. And then you'd look left to spot your other obstacles on the way down to the zone below. But we're just about to hit the short target. Michael, is that you?
That is me.
Okay, buddy. All right, guys, we will complete the recap of the alerts once we're done with the recap of the live training room. And then we'll go live for 30 minutes on the TradingView platform, do 30 minutes of live trading. And at any point you have questions, type them into the question box, okay? We're happy to answer them. Nobody sees what you type but myself and Michael, all right? Looks good.
All right, we'll get into it then. Good afternoon, everyone. Today is Friday, the 26th day of January 2024, the 26th day of January 2024. Now, if you have not taken a free trial with us, go here to mytradingiq.com and click right here. Okay, when you click there, it will be brought to this registration page. On the registration page, there is no credit card required. All we ask for is your name, your email, and your phone number. That's all. That's all they ask for. Okay, so your name, your email, and your phone number. You should fill all this stuff out. If you're using TradingView, you're using NinjaTrader. TradingView, give us your login ID if you want to have access to the indicators. With NinjaTrader, give us your machine ID. So we can set your desktop up for you, so you're using everything properly at the beginning of your trial. Okay. All right. Now let's get into the spreadsheet. Now the spreadsheet goes back over 10 years to January 2nd of 2013. If you were going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 29th day of, it is not the 29th day of December. Today is the 26th day of January 2024. Today we made 78 ticks in the NQ, 13 ticks in the Russell, 10 ticks in crude, and we lost 9 ticks on the ES. That put us at plus 442.5 on the morning session. Today it took 16 minutes and 7 trades to get to the goal for the day. At that point, we're up $2,665 with 13 contracts. All right, not with one, but with 13. So we took a total of 25 trades this morning. On the month now, we're at $9,270. That's with one contract, averaging over 18 days, averaging $515 per contract per morning session. On the year now, we've hit the goal 18 out of 18 days, and so it's all the same information because it's January, $9,270. And if you were to quit trading when you get your goal for the day, and you were to add one contract per month so far this year, you would have only had to work 7.5 hours, and you would have averaged $4,609 per hour. $4,609 per hour. Okay. All right, let's get into the trading. Now, we didn't have much going on here on crude. We had just the one trade, and we picked up 10 ticks on it. It was toward the end of the session too. It was this one right here. We picked up 10 ticks on that one. We didn't have any other trades that we did this morning. Okay, on the crude, we just had that one nice blue arrow right there. There was another blue arrow right over here. And that was all that we did with the crude oil. Okay, let's get into here. We'll get into the Russell. We had a bunch of trades on the Russell, a bunch of trades on the NQ. Let's just do the ES first, okay? We'll do the ES because we only had like 2 trades on the ES. We had this one right here where we stopped out minus 10 ticks, and this one right here where we ended up with plus 1 tick in profit. That was all that we did on the NQ. Or on the ES, sorry. On the Russell, we had a bunch of trades, so we'll get into all of those right now. If anybody has any questions about anything, you can just type them into the question box if you want to, or in a few minutes we'll be doing a live stream. You can type them in over there, and we're probably doing YouTube right now too. You can't type them in on YouTube, but maybe in the near future we'll type them on YouTube. All right, so as we scroll all the way back here, like this, back to the beginning of the day. All right, this was our first trade here on the Russell. On the very first trade, we picked up 10 ticks on the Russell. Okay, and then we had a break even, and then we had a stop out on the Russell. So we're back to 0 right there. And then we stopped out again on the Russell, and so we were back to minus 10. And then on the next trade, I missed all these blue arrows in here. The next trade right here, we picked up 10 ticks to get us back to 0. And then we picked up 1 tick there to get us to 1. Then I missed the blue arrow, and we stopped out on this one. This one here was kind of weird. It took its time filling me, and I ended up filling like 3 or 4 ticks with slippage. If I would have gotten filled in the right place, I would have had my stop at break even, but that ended up stopping me out again, put me back to minus 9. I got 1 tick here to get me to minus 8. Then here we got 15 ticks on this one to put us at plus 7. Then we stopped out there, put us back to minus 3. It ended up going down on the blue arrow. I took this one right here. It was just straight off the ribbon right there. I didn't wait for the blue arrow. If I had waited for the blue arrow, I'd have gotten some profit on it. But I took that one, so I couldn't take the blue arrow using the rules that we have. You can't take the blue arrow. After you take a trade, it's got to complete the trend. So we took the blue arrow and it put in a low. I mean, we didn't take the blue arrow, but it put in a lower swing. I stopped out, so I was at minus 3 after that one, right? Then right here, I picked up 9 ticks to get me to plus 2. And actually, no, somewhere in here, I picked up 9 ticks to get me to plus 2. And then I picked up 11 ticks to get me to plus 13. This was the 11 tick trade right here, I think, to get me to plus 13. And I didn't trade anymore after that. There were some nice blue arrows there during the break. 1 there and 1 there. Again, you only need 1 of those really good blue arrows to get you the goal for the day. All right. You don't want to be in here trading all long. You want to just be in there long enough to get the goal for the day. And that's it. All right, let me go all the way to the end over here. Okay, all the way to the end over here. Here we go. So on the NQ, this was our first trader on the NQ, and I believe we picked up 4 ticks on that first one. All right, and then the next one, I'm not sure I got everything in here, but we picked up a couple more there to get us to 6. No, we picked up, yeah, a couple more there to get us to 6. Then we got 30 there to get us to 36. Then 30 more to get us to 66. And then somewhere in here, we had another one that got us to 96. I might have missed it. All this, I might have missed it. And then we stopped out because we went up to 96. And then we stopped out, we went down to 76. And then we had another 30 tick trade right there to get us to 106. And then we missed this blue one right here. And we stopped out there to get us down to 86. And then we had a 12 tick trade there. Yeah, 12 tick trade there to get us to 98. And then I believe we ended with a stop out right here. We stopped out again to get us down to 78. Well, it didn't actually end there, but that was the last stop out we got anyway. We had a break-even trade there, a break-even trade there. And there was some nice arrows in here. This was during the break. We had a nice blue arrow right there. That would have given you a goal for the day. This one right here would have given you a break-even. And let's see, over here during the break, this was all during the break. There was a nice blue arrow there, a nice blue arrow there. And that was it. Okay. Yeah, so that was all that we did. That was all that we did in there today on the NQ. All right. Let's see. This over here. Okay. We do have the live stream coming up here in just a few minutes. We'll get into that in just a minute. So the way that we finished today, guys, the way that we finished today was today's the 26th day of January 2024, right? If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, we made 78 ticks on the NQ, 13 ticks on the Russell, 10 ticks in crude, and we lost 9 ticks on the ES. That put us at 442.5 on the morning session. Today it took 16 minutes and 7 trades to get to the goal for the day. At that point, we're up $2,665. We took a total of 25 trades. So on the month now, we're at $9,270. That's over 18 trading days, averaging $515 per contract per 2-hour trading day. On the year now, we have gotten our, well, that's true. We've gotten our goal on 18 out of 18 days. I'm just looking at the wrong part of it. We've gone 18 days and gotten our goal 18 out of 18 days so far in the year. So all this yearly and monthly stuff is the same, 9,270 on the year, averaging 515 per day. This is the important stuff in here. If you were to quit trading when you get your goal for the day and add 1 contract a month starting in January of last year, you would now be at 13 contracts. And so far this year, you would have had to work 7.5 hours and you would have averaged $4,609. Now that is with 13 contracts, all right? That's not with 1 contract. That is with 13 contracts, okay? So I am going to put another column in here that shows what we would have done with 1 contract. Okay, I will get that in there for you. All right, so let's go back here. Let's get the stream started. Okay, I think it is time. It is just about time. I'm going to start the live stream right now. Again, if you haven't taken a free trial with us, go here to mytradingiq.com. Click on this button right here. That will bring you to the registration page right here. Sign up here. And once you do that, the trial is absolutely free. There's no credit card required right here. Just give us your username. And yeah, that's it. Give us a TradingView username. If you have a Ninja Machine ID, you can give us that too. Okay. All right. That is how you sign up for the trial and all that stuff. So let's just get in there and start trading now. The live stream is beginning now. Okay. All right. The stream should have begun just now. So the way the morning wound up today, everything was really quiet. You know, in the session this morning, it's been a little bit of life, a bit of breath pushed into it since then. There's some nice blue arrow trades that triggered. This was the last one we took on crude right here, and this is what triggered it during the break. And so now it's recovering some of this huge move down. Okay, it's recovering some of that huge move down, and that huge move down should bring it back up to right about here. Is what it should do, right about here at 76.86. Okay. All right. So that's what we're looking at there. Now, on the Russell, the long-term direction just flattened out right here. It's totally flattened out right here. We are here. Well, this was during the break again. We had some nice blue arrows here during the break. I just covered that a minute ago, but we are in here. We would be looking for a bounce off the ribbon right here or pull out of the oversold, but the long-term direction is flattened right out. So I'm not actually looking for that right now. Okay, I'm not actually looking for that right here right now. Okay, and up here on the NQ right now, we're getting up into the ribbon. And we almost have a shorting opportunity there, but not quite. Okay, almost have a shorting opportunity there, but not quite there yet. And this over here, I'm not going to take this trade here either, this green arrow, because the long-term direction is really flat right here. I'm going to let that go. I want to see it establish more of a trend than that right there. Okay. So I'm waiting. Waiting is no fun, but we've had to do a lot of it today. And it's been just an unusual amount of time spent today waiting. Now we're putting in the higher swing that I wanted to see over here. We're almost putting in the higher swing that I want to see here on the Russell. All right, we're almost putting the higher swing that I want to see there on the Russell. We're not quite there yet. And now we are just about there. And over here, we're in a no trade zone right here. The aqua color is a no trade zone. So you don't want to be in, you don't want to trade once you get into that no trade zone. Okay. You don't want to trade once you get in there. That's what we're looking at right now. Right over here right now. We put in just a little bit higher swing here on this Russell, just a tiny bit. It's pulled back down to test the ribbon again. We're not onto the oversold here, so you're not going to get any kind of an arrow. The thing that would trigger an the thing that would trigger an arrow would be pulling out of the oversold to the overbought, right? With the trend. Now we're in the oversold, so now you may get an arrow. You might get a green arrow on an up close here. Now the highest probability arrows are going to be the blue ones. The green ones are the next highest, and the black ones are the next highest. Right? Looking at them right here, the green one looks just fine, and the black one looks just fine. But I know over time which ones are best. 85.4 right here. Add 8 ticks to that. Right? Add 8 ticks to that is where you want to have your buy stop limit waiting right here. At 86.2. Okay. We get the up close, we get triggered in. I just got 2 ticks of slip right there. But we anticipate it's going to get up to this level right here, up to 87.3. Right here is what we anticipate it's going to get to at a minimum right there. All right. Now the rules say after I get 4 ticks in profit, I'm going to bump my stop to break even, and that is definitely the case. After we get 4 ticks in profit, we are going to bump the stop to break even. So we do get 4 ticks in profit. I fix my stop. Now, speaking of the rules, let me just show you what the rules are. Okay. Since I think this trade might take a little while, it might even stop me out. If you go here to mytradingiq.com, the rules are right here on trade rules. And so the rules for this trade right here, it's on a 7-tick range, right? Right down here, risk management. After you get into the trade, these are the rules. Start out with a 10-tick stop because it's on a 7-tick range, right? As a 10-tick stop, the trails to break even after 4 ticks in profit. We have not had 4 ticks in profit yet, right? When it gets up to 0.8, then we'll trail the stop to break even, right? But it's got to get up there. It hasn't done that. So right now we start out with a 10-tick stop. Why do we use a 10-tick stop? Well, there's 2 reasons. One, it's under $100 per contract, and 2, the bar size is 7 ticks, so it's like 1.5 bar lengths, and that's usually enough to keep you on the right side of a trade. You know, for the pullback that we just had right here, it's usually enough to keep you on the right side of a trade. I'm just going to get ready for the break even here. It's got to get up to 0.8. All right, when it touches 0.8, then we're going to hit the break even button. But that 10 ticks is usually enough with a 7-tick range bar to keep you on the right side of a trade. Now, if you look at the bars that are bigger, that tick range has a 15-tick stop. It's got to get up 1 more tick there. The 10-tick range has a 15-tick stop. The 15-tick range has a 20-tick stop. And 25 range has a 25 stop. Now, the reason I kept the stops a little bit smaller on the larger ones, there we go, break even on that. The reason it should go up here right now to 87.4. That's what the DOM is saying. It should go up to 87.4. Now, what does the chart say? The chart says it should go up to 87.3. The DOM says 87.4. So they could both be right, but my stop's a break even. I don't have any risk on this trade anymore. Go back here. Now, the reason these are not a full 1.5 bar stop, 20 ticks is a lot. If you're going to be right, 25 ticks, that's a lot of room on your stop. If you're going to be right, you're going to be right within 25 ticks usually. Okay, that's, if you were to look at this from here to here is like 25 ticks. So you don't want to have that much risk on a 7-tick range stock or a 7-tick range chart. I mean, okay, and we like to keep the risk small, below $100 a contract. I'm going to lock in just 1 tick on this because if it's going to go, it's going to go right now. And if it's not going to go, it's not going to go right now. And it just took me out with that 1 tick. I had a feeling that was going to happen. So let's look at the chart again, see what went wrong here. Nothing went wrong, really. I mean, we got the entry, right? We got the entry where we wanted it, and well, I got some slippage on it. I'm expecting it to get up above the prior swing high. It hasn't quite gotten there yet. It's almost there right now, but I'm expecting it to get up above that prior swing high. There is just at it now. Okay, it's just at it right now. So, if I hadn't locked in that 1 tick, maybe I'd still be in this, but we want to see it put in a higher swing. Okay, we're anticipating that it's going to put in a swing just a little bit higher than what it's at right there. Okay. Yeah, that was the lesson plan behind it right there. If anybody's got any questions about anything, all you have to do is ask. Okay. If anybody's got any questions, then just ask. We just did put in that higher swing there. All right, so we got the higher swing, so now we're going to look for a pullback down toward the ribbon. We want this to get down into the oversold and then push back up. That's what we're looking for, right? So going back to the lesson plan from Wednesday, those of you guys that were in the room on Wednesday, look at that. This was the number we had earlier today. I'm going to just take that off because I don't know what it's referring to. I'll take all 3 of those off. All right, but using the leg length up. Now I know we're coming off a move down, but still that's the beginning of the leg length right there. So using that last leg length up, this is what it should do on this one right here. Okay, and then the pullback should be relatively small. This size or smaller. Make sense? Does it make sense to everyone? All right, so on the crude oil, we want this to pull back down and test the ribbon. Over here, right now, we want that to pull back down and test the ribbon. And over here on the NQ, now we've got enough of a trend here to want to take a trade over. Okay, on the NQ. So I would be willing to jump in on that as well right now. Okay. Let me come over here. Shut that off. Turn that off. All right. So right here now on the NQ, we're looking for that to come down and test the ribbon. We're not quite there, but we are oversold. We did have a black arrow back here, but I didn't take that black arrow. It's a trend change right here. So actually, it's not a trend change. I guess I could have taken the black arrow. After a trend change, I like price to come down and hit the ribbon and bounce off the ribbon. That's what I'm really looking for right here. Is price to come down and bounce off this ribbon. Okay. Wow. So now we have just hit the ribbon. Yeah, just hit the ribbon here. So down here, 533, add 8 to that. Sorry, add 4 points to that. It's going to be right up there at 37. That is a long trade. Right up there at 37 is a long trade. Now, after 8 ticks in profit, we bump the stop to break even. So it's got to hit right here at 39. It starts out with a 20 tick stop, and right there, the stop goes to break even. Okay, now I'll lock in 2 ticks. And we anticipate it's going to get up above the prior swing. I'm going to lock in 4 ticks right here. We anticipate it's going to get above this prior swing high. We'll have to look left to see where it should go. Let me just do this. It's going above the prior swing high right now. I'm going to lock in 8 ticks. We'll lock in 8 right there. Okay, it's just getting above the prior swing high right there, and we just got the 8 ticks on that. We just got the 8 ticks on that. Okay. And I guess we had a little bit of profit over here too, right? On that one. Just barely put in a higher swing. I'd really like to see the crude oil come back down here.
8 ticks with 13 contracts.
Yes. Yes,
So
that's 8 ticks with 13 contracts.
That's more than pocket change.
It is. It is indeed. There's another blue arrow. You can take this because we have just a tiny bit higher swing, but I'm not thinking you should. The reason I think that is because we really should in a much higher swing right here. And I was just saying a few minutes ago, I think there's just a little bit of a pullback and bigger downtrend. Right, the same thing that we had going on with the Russell a minute ago. We have going on here right now. This should have put in a much higher swing. Okay. And now we'll just have to wait and see. Right now. All right. So we're looking for the Russell to pull back down and test the ribbon. This area right here is a no trade zone. This area right here is. Okay. So there's no trading in there right now. And is yours delayed, Dwayne, in the live stream? Is there a big delay? Or is it pretty close?
It's pretty close.
Okay. Okay, because I'm seeing it running on another computer here. And it's just finally showing that first trade that I took.
I got about a 15-second lag, probably.
Okay, because that's like a 2-minute lag over there. It's just showing me
right now. Actually, move your cursor, and I'll tell you when I see it move.
Okay.
Now, yeah, so it's less than 50. It's maybe 5 seconds at the moment.
Okay, well, that's good. All right, it must just be my internet connection, and that makes me want to just go over here and shut this off because I'm just using up bandwidth. Okay, Angelica said there's definitely a delay for her. And John said there is for him too. Okay, so it could just be my connection or something like that. I don't know. Anyway, it's 1:16. We have 14 minutes left in the session, and we're about to have a trade here on the Russell. All right, so I'm jumping on the Russell trade. I just did, and again, I got slippage, but we want this to go 4 ticks into profit, and we want the stop to break even. There's 4 ticks. Stops at break even. We anticipate it's going to get up to this level right here. Let's go back to the leg lengths that we discussed, right? Here's our leg length right here. You see it went just about up to the top of that leg length on that last move. So this is the leg length this time, right? That's what we should anticipate out of this trade. It should get up like up to here anyway. Now the risk is 10 ticks, and it should get up to, we'll say 90.7. 90.7. That's all the way up here. It's beyond our 30 tick target. Right, it just took me out of break even, but 90.7 is beyond our 30 tick target on that. But we ended up with just a break even now. Over here on the NQ now, we're starting to change directions. The outer bands is still kind of flat. You had to bounce off the ribbon right there that you could have taken if you wanted to, but I'd rather see it put in a lower swing right here and then pull back. Okay, I'd rather see it put in a lower swing and then pull back. Okay. Thank you. All right. Yeah. Well, it's probably a delay for me, actually. All right, so now we are over here. We're changing directions on the NQ. So with the direction change on the NQ, we want to pull back up and test the ribbon. Okay, we want to pull back up and test the ribbon. Now over here on the crude, we want that to pull down here. Okay. Yeah, well, I think the delay is probably in my connection, not anybody else's, not anybody, no, any of the platforms or anything like that. It's probably in my connection, not because I had a worse delay than anybody else when I was looking at it on the computer. So I think it's all on me, not on anybody else or any platform. So I mean, everything's, when I'm looking at it on the computer is where I see it, but I think it's all from me. What I'm doing right here in front of you is real time. But as I talk about it, it's real time. Like right here on the NQ, we need a down close from this. It's got a high of 2650s and now 26, now 27. So you'd be selling 23 right now on the NQ. Selling 23.00. And here it is. I'm selling 23.00. Now that number has just changed to 24.25. Right, it's 4 points from the high of the bar. Now it's probably not be anything. 29.75 down to 25.75. It close up on this bar, it's going to disqualify all trades. Now it's 26.50. It's 4 points from the top of the bar, and it just closed up and disqualified all trades. So we don't have anything there right now. We don't have anything there right now. Okay. So on the crude oil right here, we just had all that move up right there, and now it's stopped. It's going to have a pretty deep pullback here to want to take a trade on the long side of that. It's going to have a pretty deep pullback to want to take a trade on the long side. Okay. All right. So we wait. We wait right now. And well, time is it's 1:23. We have 7 minutes left. We might change direction here again and get another trade set up on the NQ. We're coming out of the no trade zone right now. Well, we could come out of the no trade zone, but this went up. It gave us just enough to get the stop break even. Actually, I think we have +1 tick on that, didn't we? And it's pulling back now. What it should do down here. Is that where we got the +1 tick? Was it back here that we got +1 tick? I don't remember. Anyway, this is the leg length. It just now starts from down here. Okay, it's the same leg length. It just starts from down there now. So this is what it should get up to. Right? I knew this one here, you know, that's a big leg length. It starts all the way down here at 86 and it goes all the way up here. So it's like a 45 tick leg length. That's big leg length. So right now on the end, we have to pull back down and test the ribbon. On the ES, we just don't have anything. We're in a no trade zone. And over here on Russell, we're still in a no trade zone there. On the crude, we're about to come down and test the ribbon and get a bounce. Okay, about to come down and test the ribbon and get a bounce. All right, well, I'm just waiting. We just have to wait. We have the outer bands spread out right here, spread out right there. And on the crude oil, we want that to pull back down and test the ribbon. Okay, want that to pull back down and test the ribbon there. And let's see, over here on the NQ, well, it's started the new trend well enough to give us a good trade if it pulls back. I just don't think we're going to get it. It's 1:26. We only have a couple of minutes left here. I don't know if we're going to get another trade in here. So if anybody has any questions about anything, I don't see anybody asking any questions, but if anybody does have any questions, you can email us at support@cfrn.net or support@mytradingiq.com. You can contact us at either one of those. We're in the oversold right here, so we're going to get a black arrow if we pull out of the oversold right now. See this last black arrow right here? This is the full leg length. I'm really looking for a deeper pullback. I'm not going to take this. I want to get a deeper pullback. It might do this leg length right here, but I think it's going to pull back a little bit deeper, is what I think. So I'm not going to take that chance right now. The black arrows, you know, if it were hitting the ribbon, I would definitely be taking the trade right here, because ribbon is something for it to bounce off of. This is a trend change. So after the trend change, I always like to bounce off of the ribbon. Right after the trend change, my first trade should always be off the ribbon. And so I'm waiting for that. And we had the same thing here. You know, we had the trend change, just never pulled back on the ribbon. So we have to wait. We may not end up with the trade at all. Who knows? Okay. If you are watching in the live stream now or even later, and you like what you see, you can go to our website to take a free trial if you want to. It's at mytradingiq.com. mytradingiq.com. There's no credit card required to take the trial. It's right here at mytradingiq.com. Click on that button. No credit card required for the trial. It brings you to this registration page. In here, if you're going to take the trial and you want to get stuff set up on your desktop, you have to provide us with your TradingView username right there. Okay. If you want us to provide you with the indicators, you have to provide us with your username. And that's all. It is free to get started. So we're looking for this to get all the way back down here. Wow. That was a big push right down into the ribbon. I don't have anything going on right here. It didn't pull out. We didn't get, it went too deep into the ribbon. The black line is down here. It never came out of the oversold, so you're never going to get an arrow. Until maybe now. It might give an arrow now, a green one, if it pulls out of the oversold on an up close. And that would actually be a valid trade. Got pretty jumpy right there for a second. I don't know why. But it did get pretty jumpy there for a second. All right, and now it's just gone way down here. I don't think we're going to put the trade there. We might get something over here on the Russell. We did put in the higher swing. We did just about get up to the end of this swing, the leg length, right? We just about finished up that leg length, and now it's pulling back. So we might get something on the Russell, but we are running out of time. Okay, so right now we are pulling back here, and that's it. We have nothing there on the AQ. We went into a no trade zone right there. Right? Turn it off, turn it back on. Right into a no trade zone. We have nothing anywhere else. I guess that's going to be it, guys. We're going to wrap it up here. Again, if you want to see everything on your own desktop, go here to mytradingiq.com. Where is it? Right here. Go here to mytradingiq.com, click this button. No credit card required for the trial. Sign up for the free trial. And when you do, you're going to be brought to this registration page. Again, first name, last name, phone number. That's it. Down here, if you want to give us your TradingView user ID, you can. And if you do, we'll get your indicator set up for you on your desktop. If you don't, you're welcome to come to the free trial and just watch. Okay. All right. That is it, everybody. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am. Recap of the morning session.
This morning, it took 16 minutes and 7 trades to get to $2,665 with 13 contracts on.
Great job, my friend.
Thank you. Thank you.
Fantastic. All right, guys. We'll pick up where we left off. Now, when Michael came on, we were approaching the short target, which we hit. When the market finds support, it's going to go look for resistance. So we have here a culmination of three things, really four things. Okay, when price pulls up to the BBC, we expect that to be resistance. Price pulls up to the step line, that's the black line, we expect that to be resistance. Price pulls up to the zone, we expect that to be resistance. Price pulls up to red and falling, we expect that to be resistance. And if price were to somehow overcome all of that, that would give us a beautiful little window of opportunity right here. Grab our goal for the day. 17,607 to 27. That's $400 per contract traded right there in that window. Now, let's say price pulls up and we do find resistance as we expect. Remember, the pullback holds more often than not. So let's say we pull up and it holds and we start to drop. We got to get below the low of that candle and then look to get out below the low of that candle. So we need to tighten this up a little bit. Okay. Need to just that back a little bit. Okay. And okay. So that's roughly 17,488 down to 73 from, let's call it 17,490. We could actually pull this down to 470. We'll call it 71. Okay. So from 90 to 71, that's 19 points. It's just shy of $1,000 per contract traded. Roughly 20 points. I'm sorry, 20 points at $20 a point, $400 per contract traded. NQ pays $20 a point. So here's where we open. Came right down to the short target. That you got your goal for the day in the very first candle last night. Traded through the short target. Look left, we'll find out why the market stopped falling there. Then we get above the BBC, we run up to the zone, consolidate. That's what happens 70% of the time. 20% of the time rejection, 10% of the time the slice. Pull back to the BBC, make another run. We get stopped dead. Buyers were not committed enough to try to take out that high. They folded. So from here, if price gets above all this resistance that I just outlined, there's your window. If price drops and takes out that low and that low, there's your window. Go for the day times 2. Okay. Again, these are the zones that were published Monday morning, 6:15 a.m. Eastern. Support, resistance, back to support. That's how price moves from zone to zone to zone. Crude oil. Crude oil just staged an amazing turnaround. Here's where we opened last night. Got below the BBC, a leg and a retracement and a leg, and then we got above the BBC and ran right up to the long target. We then pulled back to the BBC and traded through it to get to the short target. Okay. overshot it a little bit. Buyers could not resist that price. You see this low is basically this low. Okay, buyers stepped in just a little bit early, and like a rocket ship, they've taken it all the way above the BBC to the long target, through the high of the day, and we just exceeded the highest weekly trading zone for the week. 78/7805. Now, based on history, by the close of business today, price will most likely be back at the weekly zone or below. Are there weeks where we close above the highest zone or below the lowest zone? Yes, it does. It has happened. Could happen in this case here. But since we've been publishing the zone since December 14th, 2009, every week, we only have seen that happen maybe a couple of handfuls of times. Leg, retracement, a leg, and a reversal. So once we took out this high, this is no longer a pullback. We're now building legs in the other direction. Now this has been such a strong move, we'll potentially see about a 50% retracement, which would bring us back down to the BBC. In fact, go from this low to the current high, which that high could change because we're still painting a green candle. But the 50% right here. The BBC is basically between the 50 and the 62. Okay. The one thing I definitely would not recommend doing right now is going long. Okay. We spike the zone and we're already backing off. Okay. So I'm not saying we can't go higher or won't go higher. What I'm saying is let this play out, and then maybe you get a retracement back to the zone and price finds support at the weekly zone and then starts printing green candles. That's when you would go long. Okay. Not right now. Anytime you chase the market, it's almost always going to come back to haunt you. Okay. Plan your work in advance and then just do your job when the time is right. Always let the trade come to you. Never chase the trade. And as you can see on this move up yesterday, leg and a retracement, leg and a retracement, leg and a retracement. Actually dropped below, and now we're doing legs to the downside. Leg, retracement, leg, retracement, leg. Here, put in a higher low, slightly higher. Not by much, but slightly higher. And that was the impetus to send us up to the long target. When the market finds resistance, it's going to go look for support. When it finds support, it's going to go look for resistance. How this candle closes in 20 minutes will be very important for the remainder of the session. Back over here, you can see these are the zones this week. Okay. Price rises to a zone, we expect resistance. Resistance. When price drops to a zone, support, 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 resistance, support, support, resistance. This window of opportunity that was drawn in has filled. That brings us to today. But notice this price is climbing. This is how price moves. Whether you're on a 1-minute chart, a 5-minute chart, a 30-minute chart, a tick chart, a range chart. Leg, retrace. Leg, retrace. Leg, retrace. The pullback holds more often than not, but eventually it will trade through the BVC. That keeps the markets fluid and tradable. Let's see where we are with this green candle. Now, do you understand why I said whatever you do, don't go long up here? Okay. Now, because I'm saying price can't go any higher, but that's where so many traders make their mistake. Now, getting long here would have been perfectly acceptable, okay? But getting long after a huge move like that, you know, you may have said these words, why do I always get stopped out to the tick? That's why. Now look what's happened. Got a red candle. From the low. Oh, grab the wrong tool. Grab the right tool again. From the low to the high. Okay, we've just come through the 24% fib. That's the shallowest possible retracement. Here's the 50. Here's the 62 where the BBC, the step line, and blue and climbing have converged. So could this thing drop like a rock right to this support area and then bounce? It absolutely could. What a great example this was, okay? We could just sit here and watch it drop, but I don't have the time. So we got to move on. Keep an eye on it. And maybe we'll take one more look in a minute. Gold. This was the opening candle last night. Pulled back to the BBC. Made a run to the zone. And then we filled this window of opportunity that I drew yesterday afternoon in a mentoring session. Filled right here. Okay. And then when the market finds resistance, okay, yesterday, where did the market find resistance? At the zone. Where did it find resistance last night? At the zone. Where did it find resistance today? At the zone. And then this 8:30 news-driven candle attempted to get to the zone above, but didn't quite make it. It only made it to 2028. Then price gets below the BBC. Blue and climbing turns to red and falling. And now we're headed down. The step line has crossed red and falling, the black line. Okay. That indicates that price will most likely pull up to the BBC, which we expect to be resistance until proven otherwise. If by chance price pushes through the BBC, then watch this area right here where the bearish cross took place, because if price gets through the BBC, maybe spikes it, it will probably find resistance right here. Then you would have a window of opportunity for most, say 2021 up to 2022. And then you could also trade. There's not a point from the top of that candle to that zone. So let the pullback happen. If the pullback holds, we'll be trading it to the downside. If the pull up doesn't hold, we'll be trading at the zone above. Remember, price is always trying to get to a weekly trading zone. And these are the zones that were published Monday morning at 6:15 a.m. Eastern. Silver. Here's where we opened last night. We come down to the BBC and the zone. support. And that sends us almost all the way to the target. But with silver, you only need 2 pennies to get your goal for the day. This one candle opened at 23.04 and ran up to 23.08. That candle right there is $200 per contract traded. Then we pull back to the zone and consolidate. That's what happens 70% of the time. Then we close above the fray, and price takes us from the open here of this candle at 23.02 all the way up to the target at 23.10. $23.02 to $23.10. That's 8 pennies. That's $400 per contract traded. We've earned the right to trade 10 contracts. That's $4,000 over an hour and a half. Okay. And price stopped dead in its tracks at the target. Then price gets below the BBC, below the zone, and drop to the short target. Shoot it a little bit. We find support here, which you'll notice is this support right here. Always looking left. If you learn to look left, you'll keep yourself out of a lot of trouble. Okay? So support sends us to resistance, sends us back to support, sends us back to resistance, sends us back to support. And we're printing a red candle below the BBC. So 22.75. Well, you'd have to go 22.76. That might be a little close. Yeah, I'd probably leave that one alone. Okay. But it's your trading business. Do as you see fit. Okay, our last chart, the euro. Again, all these targets, our traders had them last night at 6:05 p.m. Eastern. All of our traders and all of our trial members. So the market opened below the BBC, so we're thinking lower prices. Once blue and climbing turns to red and falling, now we're really thinking lower prices. And down we go to the short target. Buyers step in just above the zone, push us back up to the BBC, and ultimately push us all the way to the long target. Two-sided action. Missed the short target, you got the long target. Maybe you got the short target and the long target. Maybe you just got your goal for the day last night and put the mouse away, and you're somewhere big toe fishing right now. Okay. Over here, got resistance overhead, red and falling. At the moment, we've traded through the BBC, but that happened over here too. But look where price closed, back above. So you just got to be patient and wait. Price needs to get below, if you're going to trade short, price needs to get below the zone, and it needs to get below this bullish cross. So, great window of opportunity. Actually, not so crazy about that. To get below that low. Yeah. And so the good news is if I don't have a viable setup on the euro, Then I just go to the ES, the Dow, or the Russell, or the NQ, because we trade every market exactly the same. Crude hasn't made it to that 50% fib retracement yet, but that huge wick sticking up there, it looks pretty bearish at the moment. So because we trade every market exactly the same, you can just scroll through the markets as I'm doing here and look for a good valid setup, good window of opportunity, take advantage of it, put the mouse away. The question is here will a zone hold? If it holds, then you're trading upside, back to the long target. Doesn't hold, and you get below this bullish cross, then you're trading to the downside. And where are we on the day? Remember, we put in a on Wednesday, 49.33 was the high. Today, we took that out by 1 point, and I'm always warning you, when the market puts in a new high or low by 1 or even 2 points, sit on your hands until price proves itself. Imagine how many breakout traders are crying in their soup right now, because their stops have been whacked. Okay? It's important that you learn to use multiple time frames. If you become a lifetime member, we will teach you how to do that. How to not only use multiple time frames, but think in multiple time frames. It's very important. Okay? So we're sitting on top of support at the step line. Resistance is at the high of the day. But it's certainly a different picture than we saw when the broadcast began. Okay? It's a narrow range day. But the fact that it's turned red and it's bouncing a little bit off the step line, right below it, there's support at blue and climbing, support at the 24% fib extension, and support at the 24% fib retracement. To become a lifetime member, go to mytradingiq.com. Now that door for lifetime membership, no recurring fees, no upsells, and no nonsense, closes January 31st. Everyone who is a current passport holder or becomes a passport holder before January 31st, you will be a lifetime member for life. That's what lifetime member means. And you'll have no recurring fees, you'll have no upsells, you'll have no nonsense. You're a member of the family for life. So if you want to learn how to trade for a living, be sure and get your passport before the end of the month. Not only do you have access to the live training room for 2 hours every trading day, you have access to unlimited one-on-one private mentoring. Strategy that you learn and the indicators that you own for life as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, forex, ETF, it doesn't matter because price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. It's been in place since the inception of the markets, and it will continue to exist until the markets fail to exist. Why? Because that's how markets work. People will tell you, you can't trade the ES the same way you trade gold. Really? We do every day. Why can't you? Oh, well, they've got different personalities. We're not looking for a relationship. We're just looking for a high probability, low risk trade opportunity. We trade, again, everything exactly the same. As a passport holder, you'll get the Logic 247 alerts around the clock. Get the Concierge Trade Alert report every evening when it's published. Of course, you'll be in the Thursday night members-only workshop. And you'll have the keys to the vault that contains the archives of all the previous workshops. There's so many resources available. Everything a trader needs, all under one roof, one low price. mytradingiq.com, 949-42 Emini, support@cfrn.net. Let's wrap this week up with our good word for today. Yesterday we talked about the importance of forgiving. Revelation 22:20 says, "Come, Lord Jesus." I got news for you. He's coming back. Hold on for me 1 second, guys. Sorry, guys. Hold on for me 1 more second. So, the good news, he's coming back. The last promise and prayer in the Bible is, "He who testifies to these things says, surely I am coming quickly. Amen. Even so, come, Lord Jesus." Revelations 22:20. And it's the last major prophecy concerning Christ's return was fulfilled in 1948 when the nation of Israel was reborn. See Amos 9:14. Since then, the clock of Bible prophecy has been ticking and the countdown is on. Cynics and critics sometimes say, Christians have been telling us for hundreds of years that Jesus will return, but it hasn't happened. That is additional proof of Christ's return. Because the Bible says, In the last days, scoffers will say, what happened to the promise that Jesus is coming again? From before the times of our ancestors, everything has remained the same. But you must not forget, a day is like 1,000 years to God, and 1,000 years is like a day. The Lord isn't really being slow about his promise. He's being patient. He does not want anyone to be destroyed, but wants everyone to repent. But the day of the Lord will come as unexpectedly as a thief in the night. Then the heavens will pass away with a terrible noise, and the very elements themselves will disappear, and fire, and the earth, and everything on it will be found to deserve judgment. Since everything around us is going to be destroyed like this, what holy and godly lives you should live, looking forward to the day of God and hurrying it along. But we are looking forward to the new heavens and the new earth he has promised, a world filled with God's righteousness. 2 Peter. Jesus is coming back again. Be sure you're ready. And when he comes, make sure he catches you about your Father's business. That's our good word for the day and for the week. Hope you have a great weekend. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.